Hello traders, you're welcome to this video and you are welcome back to the Forex Geek channel. Now in this particular video, we are going to be looking at a candlestick pattern known as the free close candlestick pattern, the identical free close candlestick pattern. All right, so if you are not familiar with candlestick patterns, then you might want to stick around till the end of this video so that you will learn something about the free close candlestick pattern. All right, there are many candlestick patterns out there, but we're going to be focusing on the free close in this video. All right, so in case if you have wondered how to spot the start of a bearish trend with just a glance at your candlestick charts, the identical free close pattern can be a powerful signal for identifying bearish reversals in the market. Okay, because this pattern is one that can help you to spot bearish reversals. Whether you are a beginner or an experienced trader, you wouldn't want to miss what we have in this video. All right. Now, the identical free close pattern is a classic bearish reversal signal, right? And I just want to look for the pattern. I want to look for it on the chart, okay, so that we can properly understand how it works. Okay, I think I can see something like that around here. Okay, now this pattern is a bearish reversal signal pattern, okay, that forms after an uptrend. Now we can see that we had an uptrend here, right? There was a consolidation after the uptrend, right? There was a bit of a consolidation, but it did not rule out the fact that we just ended an uptrend, and we just ended an uptrend, an upward move. And basically, even to streamline it down, we just had an upward move here just before the pattern formed. Okay, so even streamlining this further, we had an upward move immediately before the pattern formed. All right, now the pattern is identified by 3 consecutive bearish candles. 3 consecutive bearish candles. Each of them have a similar body length. It doesn't have to be exactly the same body length, okay, but at least we can see that they're somewhat similar in terms of the body length. All right, and then there is going to be a little to no lower wicks. All right, you know, compared to a long wick like this, or a long wick like this, or a long wick like this, we can see that the wicks at the bottom were quite, you know, shorter compared to such like this that can indicate a bullish move. All right, and now another thing is that these candles, they open, you know, you are not going to see a gap. All right, you're not going to see a gap within each of the candles, because the candles open just, you know, as the other candle is closing, the other one is opening, so somewhat, you know, close within the body of the previous candle. All right, so it indicates a strong selling momentum. Okay, now how do you identify the identical free close pattern? First of all, the market should be in a, like, there should be a previous uptrend. All right, there should be a previous uptrend preceding the candlestick pattern. All right, and then you're going to have the first bearish candle of the pattern appearing just right after a bullish move. Okay, you're going to have the first bearish pattern appearing, and then the second bearish candle opens within the body of the first candle and closes lower. It must close lower than the previous candle. And then finally, the third candle does the same, open within the body of the previous and close lower than the previous. Now, these candles are nearly identical in size, which is why this pattern is called identical free close. Okay, now unlike other bearish patterns, the identical free close signal is distinct because of its precision. All right, the uniform size and consistent downward movement of the candles demonstrate clear control by sellers. Now we can see that right after the pattern formed, we had a significant dip. All right, we can see that the price of the asset sold all the way down to this point. Okay, so if we had entered a sell, right after this pattern formed, we would have caught somewhere around 290 pips. Okay, that would have been a good catch. Okay, so from this example, we can see how the market was trending downwards. Okay, right after this pattern formed. Okay, now why is this pattern important? Traders use the identical close pattern to anticipate bearish reversals. So it is particularly effective when combined with other technical tools such as resistance levels. Do you see the reason why it's important to draw resistance levels on the chart? Because sometimes you might have this pattern form after the price has hit a resistance zone. Because remember that resistance shows us reversal points. Okay, bearish reversal points. So you can have a layer of confidence when this pattern forms right after a resistance, just like what happened here. Okay, now spotting this pattern at key levels like this strengthens its validity. But remember, there is no perfect pattern. No pattern is perfect. Okay, the identical pre-close pattern does not guarantee a reversal. All right, there could be a situation whereby the pattern will form and then eventually you will still have a bullish move. Okay, but it doesn't mean that the pattern is not it doesn't work. The pattern actually works, as we can see in this example. This is a valid example, but it does not mean that it will always guarantee that a sell move will prevail. All right, so now in order to increase the reliability of the pattern, you might want to combine it with other tools. For example, you can use RSI. You can use an indicator like the RSI just to confirm signals. You can use the RSI to check for overbought conditions, or oversold conditions just before the pattern forms. For example, we can see that here we had the RSI trending downwards. In as much as the RSI was not exactly in the overbought territory, but it was trending downwards, showing sell momentum. So this would have been our confirmation signal for this pattern, because we had a sell momentum indicated by the RSI. And then secondly, you can also use moving averages to confirm the trend shift. So for example, if we're going to add a moving average to the chart, we can see that right after this pattern form, or while the pattern was forming, we had price break below the moving average. So that was even indicating a bearish reversal, right? The moving average also confirmed this sell move. Okay, and then it's also important to pay attention to volume. All right, high volume during the pattern adds to strength as well. Okay, so in summary, the identical three-close candlestick pattern is a powerful tool for spotting bearish momentum. Okay, it shows strong seller dominance and often signals a trend reversal. However, as always, confirm it with additional analysis to avoid false signals. Okay, so if you found this explanation helpful, make sure to hit the like button and subscribe to the channel. All right, and don't forget to turn on notifications so you don't miss our upcoming videos on candlestick patterns and trading strategies. In the meantime, thanks for watching and happy trading.